Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. All right, daily chart, and you can see the Bears have their second chance at converting the daily mid-band, the 20-day simple moving average, in the span of about 6 sessions. So you go print your 66 half high. They bring it in. You got jobs, the Fed, CPI, a lot of things that it's weighing a little bit on the market right now, and justifiably so. So they come in and they go do a low at 36 half. They can't convert. They don't even touch there. Bulls take it back up, but they don't go farther than 59 quarter. So you got lower highs here. Right now you got a higher low. What did we do yesterday? That was at 68. Yeah, 68 quarter. Right now you got 73. So it's in this little triangle-ish action, at least at the moment, as of 9:03 in the morning Eastern time on Wednesday. You got this little triangle that's going between the all-time highs and the 20-day simple. Things kind of bisecting the 9-day. The Bears did a good job yesterday of converting the new weekly pivot up at 5,006. A good job of converting 5,000. But we got down to the daily mid-band, and they did not do a good job. So yesterday was kind of a draw. Neither side did what they wanted to do. The Bulls couldn't live above 5,000. They couldn't live above the weekly pivot, which is what they really needed to do heading into this week, especially after this Friday where they, basically gave it up and closed in and around the 9-day. It was not a good look. At the same time, the Bears need to start living below the green line. Why? One of the baseline assumptions that we have in our methodology is that whether it's a stock, an index, whatever it is, if it wants to trade between the middle band and the upper Bollinger Band, so the 20-day simple in the upper band, that is a buy dips tape. If it wants to live down here, as it did so much last year, that's a sell rallies tape. And, there are fits and starts in between, but as a general proposition, that's the way it goes. So this is another opportunity today, and you got the whole day laid out in front of you, Bears. It hasn't even technically started yet. You got the whole day laid out in front of you where you can close below the green line and start reaching towards the lower Bollinger Band. You got things down there like the 50, and turn the narrative from a buy dips narrative to a sell rallies narrative. What they do with it is what they do with it. They usually don't do much with it. Hourly chart. So yesterday we engage it. This green line, same green line is on the daily chart. 20-day simple, daily mid-band. They give it up into the close. The close was kind of weird. They did this like 14, 15 handle double-sided whip job, which was like, okay, whatever. We're back here, so they tested it again, here and here. It's a higher low. Now remember, the bane of the Bears' existence over the course of the last 3 or 4 months has been lows and higher lows. Low, higher low, rip it to the upside. Low, higher low, rip it to the upside. We seem to have gotten, and I'm happy about this, out of this habit of really compressed pricing. We had it, this is a holiday. I don't really, come on. We had super compressed pricing back on Monday the 12th. That lifted us up into the high. And then it was kind of a head fake to a band ride down, at least on an hourly basis. So this has been much more of a two-sided conversation. And this tape should be a two-sided conversation. The Bears have a point. Inflation has a point. Commercial real estate, housing, all of the very logical things that shorts and bears yell and scream at everybody about all day long, it makes a lot of sense. At the same time, the market is a forward-thinking mechanism, which is why, at the end of the day, things tend to march higher. But the one-sidedness that we've seen over the course of the last 6 months has kind of been a little bit out of character. I think it had a lot to do with performance chasing into the end of the year, and then that kind of spilled over into January. This should be a two-sided tape. And it is a two-sided tape right now. And if what you're telling me, if spring is about a massive triangulated trading range from 66 down to to 49.36, and so like 130 handles, and we're going to do this, then we're going to do this. That's great. That's great for day traders. That's great for position traders. That's great for swing traders. That's great for everybody. That's an excellent trading tape. The street won't like that because it's hard to put money to work in stuff that you want to hold forever and ever, because it's just, you're not really getting any traction. They would rather have a deeper pullback, but maybe we get it. You feel like, let's go back to the daily chart. And I know I haven't done one of these in a while because I've just been running around and I got a million excuses. None of them are particularly good, but if this converts, I have a very difficult time with it not getting back to this low of January 31 pretty quick, 48.66. And if the bears can somehow convert this, you've got another air pocket to here. You've got these air pockets that can be filled. They can be filled, and you're engaging lower band and things like the 50 on the way. That's not, this is not like my view of the next 5 minutes. But if the bears can responsibly convert the daily mid-band and trade it in a way that it isn't Wile E. Coyote off a cliff, because every time they go Wile E. Coyote off a cliff, at the bottom of the freaking cliff is a trampoline. It's so easy to buy. And people buy and they pile in and the whole thing, and then, everybody gets all, the weak shorts get frustrated because they get nuked again. It's Charlie Brown of the football. But if they can steadily take out the green line and go to work, you have areas that, in my opinion, need to be tested. Here, here, and here. You have to see how it plays. What's going on up here? Look, it's all-time highs. It's blue sky. Blue sky always feels like it's gonna, it's gonna be the end, and then it's not. And then it lifts for another 20, 30, 40 handles because you got people throwing darts at highs, making big assumptions and big statements about how, it's not going to go any higher. This is it. I'm planting my flag here, and those people just go through their trading lives being so wrong forever until they don't have an account anymore. One of the hardest things to do as a trader is to recognize that price wants to go up, wants to make a new all-time high, and wants to continue on, and you buy it. And it feels like garbage, and then it doesn't. Then it feels pretty damn good. It's better than getting, dragged out of a short after a short and adding and adding and adding and adding. That does not work. That is not a long-term trading strategy. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.